interest rates are dropping or the Fed's going to cut rates soon and all that. Well, yes, that's true. That's probably going to happen in the near future. Does that affect interest rates immediately? No, it doesn't, unfortunately. But interest rates will over time start coming down as the Fed starts lowering the Fed funds rate. So my goal for you is to make sure that we catch a spot where the interest rates are kind of at a lower point than they are today. Because, unfortunately in Florida, the refinancing costs are a little bit more expensive than most other states. So we have to kind of pick our spots to take advantage of this. So if you have an interest rate that's above 6%, we should have a conversation on what exactly our plan would be of where the right spot may be for you and map that out appropriately. So I'm going to have you listen to something that one of my colleagues put together that I follow every day with regard to interest rates. And he's got some really good information to talk about what's happening in the market today, where the inflation rates are, what to expect in the near future. And as our inflation rate comes down to the 2% range, which it hasn't been in almost 3.5, 4 years now, we're going to start seeing interest rates trending lower back to where they were 3-4 years ago. And hopefully, that we can catch a spot where you take advantage of that. So if you're over that 6% mark, we should have a conversation. Rates are still in the 6.5 range right now. Some spots maybe we can get down to somewhere in the fives, high fives or something, just depending on your loan, if it's an FHA or VA loan or conventional loan. So depending on what that is, we should look at it and put a plan together to effectively, know where our spots are so we can put a specific trigger in mind for you. Now, you should have also gotten our Home Watch report. Now, that will show you exactly where the trending rates are going. I'll also send you a link to the interest rate trends that I put together that takes all of the lenders and banks across the country, puts it all together into one range. So you've got a really clear indicator of the range of where rates are going and how they're flowing, so you can kind of see the movement of them as they lower down. Now, we don't want to pull the trigger too early because it's expensive, right? So we do want to put a plan in place for you. And I want you to go to this link for me and make sure that you are signed up for your HomeBot report. If you're already signed up, then you've seen it, you're watching it, I'm sure, on a regular basis. But if you go to ams.money/CP Linktree, that'll take you to my Linktree. And within there, you're going to scroll down to the HomeBot button that says HomeBot Homeowners. And that button will give you access into your HomeBot report. And you'll be able to just make sure that you have access to it. If you haven't been getting emails, maybe it's been going to junk or something, you can go in there and re-register yourself and start getting access to that report. It's a free report that I give you. Every month you can check it, actually every day you can check it, but every month they actually send out the report, but you can check it on a daily basis if you wanted to. So what I also want you to do is send me your most recent mortgage statement. Send it to my team account so we can gather them as they come in and we can address them and put a plan together that makes sense for you. I want you to send it to team@bestmortgageratesfl.com. We set up that specific email address for you to send that statement into so we can bring them in, set up the monitoring service and stuff for you and figure out what the best plan of attack for you is. So listen, if that's all you wanted to hear, I appreciate you and I look forward to working with you now and in the near future. Sorry. And but call me anytime, 561-373-0987. I'd be more than happy to help you talk about anything, whether refinancing, buying a new home, buying a second home, maybe you want to put something together for your children, whatever it is. We can do anything from private loans to conventional, VA, FHA, USDA, all the regular stuff we can do. Now we can do loans for planes, boats, exotic cars, RVs. So we can do loans for just about anything right now. So if you have something or know somebody that is going through a process of buying a home, refinancing, maybe buying an RV, an exotic car, an airplane, or a boat, we can help with all of that. So check out this video from my good friend Barry Habib. He is, I listen to him every single day. I have a pulse on the marketplace. I know exactly what's going on every single day. So I want you to know that I have your back and I'm watching it for you. So check it out. Let me know what you think. And if you don't want to listen to it, you can hop off now and start gathering your statements and sending them over. Or you can go and set up an appointment with me from that Linktree account. So check this out. I think it'll be well worth your listen. And listen, you have a great week. I hope you had a great Labor Day weekend. And let's Let's catch up soon. Talk to you soon. Check it out.
The Fed's favorite measure of inflation, core PCE, came in today, and the monthly reading was right on time. We want it to be always on time. Good morning, everyone. Happy Friday. We did get core PCE this morning, and the bond market is relatively flat, stable. There's a few factors. The monthly number was pretty darn good, coming in under 0.2%. I know the media says 0.2 because they rounded up. It was actually 0.16. So let's do some math. Take 0.16, multiply it by 12. That's less than 2% right on the Fed's target, right on time. But let's take a look and break this down a little further for you. I'm going to show you a chart here, and you will see that the headline number was also right on time at 0.155. The annual numbers, we talked about this, that the annual numbers are going to be a bit more stubborn. Why? Because the replacements for 2023, and we'll break that down further during this period of time, were pretty low. So we actually rose on a year-over-year basis from 2.47 to 2.5, very slightly, because last July of 2023 came in right around these same numbers. So even though this was a very good number, we just couldn't make progress here with a July 2024 reading. Now, the core rate of inflation, again, came in right on time, 0.161. Again, you multiply this by 12, it's under 2%. But yet the annual reading went up slightly. Now, this was revised lower last month to 2.58. It'll read at 2.6 for the media, so it shows it unchanged. But there was a slight bump up, not because this was a bad number. This was good. It was just, as we told you, progress would be grudgingly given because of those readings last year that were very low. Now, when we break down the pace, if we look at the last 3 months, and this is something that the Fed tends to look at pretty closely, it's favorable. July, this was the reading we just got, very low. June, very low. May, very low. So the 3-month annual run rate, meaning if you took these numbers, added them together, that would represent a quarter of the year, multiply it by 4, the annual run rate for the last 3 months is 1.7%, handily below the Fed's 2% target. So this is all good stuff. We know the Fed looks at it. They like to look at a 6-month run rate as well. We'll be taking a close look at that as the months progress. But now if we look at what the biggest contributor was, it was once again shelter. So the core PCE annual reading, 2.62. When you factor in the effect of shelter came in at 0.39% month over month. And shelter also came in 5.27% year over year. Now, these numbers are going down, but they're still too darn high. It contributed 0.7% to the monthly reading. Now, if you remember, it was 1.61. So 0.7 of that was shelter. And the yearly contribution was 0.93. So of this 2.62, 0.93 was shelter. So everything else coming in at about 1.7% year over year. But we know shelter lags dramatically. If shelter were real time, let's say at 3% instead of this 5.27, well, we could do a formula here. We know that we take the 5.27 minus the 3% that it really is coming in at. That leaves a 2.27 overstatement. Based on the weighting of shelter, this would result in an overstatement of 0.4%. So core PCE really should be 2.22 without that shelter lag. Dan, another big contributing factor was financial services, right?
It was. Financial services bumped up. It made up about 26% of the increase. Boy, you take a look at financial services and shelter, it really made up like 70% of the increase. But one of the things that I thought was interesting within the report, if you look at like the breadth of all the different components, is there was a lot more negative readings within this report. So, a lot of the items, especially goods were completely flat, but a lot of the items really starting to temper and come in line with just a few exceptions like you mentioned. But we're going in the right direction. The paces look great. And it's something the Fed definitely looks at.
Now, I want to take a look first at going forward and seeing how tough the progress would be in the coming months because of the low comparisons. And we've broken it down for you. As we see the upcoming core PCE replacements, so the one that we're going to be receiving at the end of September will be the reading for August of 2023. And man, if you thought that this last replacement was low, look at this one. Wow. It's tiny. So it is possible to see the year-over-year reading go up. But if we go to September 23, now we'll get that at the end of October. We had a beefy one here, not super beefy, but we should make some progress. But then it gets tough again. Where we will make some big progress is in January, maybe February, March, which tells us, and Dan, we talked about this, I think the Fed will hit its 2% inflation target, but it looks like it'll be sometime, would you agree, in the first quarter of 2025?
Yeah. Yes, because the comparisons get a little bit better. It gives more time for shelter to catch up. So you put those two together. I think very realistic. First quarter 2025, we're at or right around 2%. Now, also within this report, we get spending and income numbers from the consumer. And if you take a look at this chart that I created, the savings rate is now at a 16-year low when you remove COVID. Hat tip to Peter Bookfar for that statistic. Pre-pandemic, it was around 8%. And just look at how much this has plummeted this year alone. Started in January at 4%, and here we are now at 2.9%. So this is, finite here. Consumers only have so much savings that they can exhaust, and it's just another sign that the consumer's under a lot of stress, and spending you would have to anticipate will begin to slow in the economy.
Dan, the craziness of it is dropping from 4%, which was half of what it was pre-pandemic in January, but now down to 2.9%. That's a big drop in those 7 months that you showed. From 4% to 2.9, that's alarming in my opinion.
And for news next week, on Monday, the markets will be closed for Labor Day, so there will be no update, but it is jobs week. On Wednesday, we're going to get JOLTS. On Thursday, ADP. And on Friday, the big BLS jobs report, where estimates are for 163,000 job creations and for the unemployment rate to decline from 4.3% to 4.2%.
It's already jobs week. Boy, oh boy. Let's take a quick look. The market's pretty flat. We're up 1 basis point. 10-year Treasury's down 2. It's a little bit of an improvement from where we were. And on the 10-year here, I just want to show you, we're in a wide range, but that 25-day moving average moving lower. All the moving averages are moving lower. That's a good thing. We just have to be mindful of this. Taking a look at mortgage-backed securities, the good news is that this support level is holding. Used to be a ceiling. Now it's a floor. The bad news is at least for now, that upward trend line, we have just kind of cut below it a little bit. We could resume a move back above it. Let's just see. But this upward trend line, which was very nice, may have been broken. We'll wait for the close today to see. But since we do have this floor support underneath us, and we do have the market treading water here, we're going to float into Labor Day weekend, and we wish you a healthy, happy, and fun Labor Day weekend with you and your family.
Thank you. Awesome. So I guys hope you had a great Labor Day, and hope you enjoyed that little tidbit of information. So realistically, based on what we're seeing here on the reports and the projections, is next year, first quarter going into the summer, not maybe like 8 months from now, 9 months from now or so, we should see probably the lowest rates start trending lower. So as they start trending lower, opportunities will arise. So listen, I hope you enjoyed that. Again, like I said in the previous before the show there, you can always call me 561-373-0987. Check out my link tree, download my V card, text me whenever you want to that same number. Which is at the ams.money/CP link tree. So listen, I hope you had a great week. You had a great Labor Day vacation over the holiday weekend there, and I look forward to chatting with you soon.